Welcome to episode 185.
You're listening to Escaping the REI Newbie Zone podcast, where you'll learn the underground, closely guarded secrets that will revolutionize your real estate business. This podcast is all about helping you exit the real estate newbie zone and enter financial freedom, building up your real estate throne. This is Escaping the REI Newbie Zone podcast. And now your host, real estate investor, entrepreneur, world traveler, and nationwide mentor, Chris Bruce.
All right, welcome back to another episode of Escaping the REI Newbie Zone. I am your host, Chris Bruce. I want to say thank you for tuning in to this week's episode. Now, I have a very special guest that I'm going to be interviewing and bringing him on. But before I do that, I want to make sure that if you haven't already, subscribe to the podcast. That way, once this comes fresh off the press, you'll get notified. So that way you can be able to tune in as soon as it is available. Now, today's guest is actually a certified tax coach. Okay, he's been a business owner, and he's also been a former New York police officer with 17 years of experience. After he got out of the police force, what he did is he actually became a certified public accountant, and he's been that for the past 15 years. He's been helping real estate investors be able to use tax advantages. That way you can make sure that you are saving money. Okay, remember, the game is not just about making money, but it's also about saving money. And he also wrote a book called Secrets of a Tax-Free Life. But today he's going to be talking about the 10 most expensive tax mistakes that can cost business owners thousands of dollars. He's also going to be talking about ways you can proactively tax plan so that way you can minimize taxes of paying all that money to Uncle Sam. So let me go ahead and wait no further and introduce my guest, Craig Cody. All right, guys, welcome to another episode of Escaping the REI Newbie Zone. Again, I'm your host, Chris Bruce. I have a very special guest, which I talked about in the intro, and he's going to really dive in on some different benefits that you can use with having pretty much a great CPA, some tax planning things that you can put into place, because everybody knows that, you know, it's not just about how much we make, it's about also how much we keep. So let me go ahead and wait no further on and introduce my guest, Craig Cody. How you doing, Craig?
Very good. Thank you, Chris, for having me. Psyched to be here today.
Oh, man, I appreciate you taking time out your busy day to come on to the podcast and really be able to help the listeners, especially when it comes to taxes, because we don't talk about it so much. But before we get into all of that, can you tell me a little bit story about yourself and how you got started into the business?
Oh, yeah. Well, I took a roundabout route. This is a second career for me. So my first 17 years, I was a New York City police officer. Then when I left the police department, I went into accounting. I was always, into numbers. I was an economics major my first time around in college. And I joined an international firm. A number of years later, I started my firm. And about 8 years ago, we really started focusing on tax planning and helping our clients, keep more of what they make, being proactive.
Nice. Okay. And so what led you even to really go from, like you said, the police force to getting into, becoming an accountant? Like what kind of made that shift for you?
Really, my first time around in college, I was an economics major. I thought I was going to go work on Wall Street. I wound up, making a decision to follow my dad's footsteps and become a police officer. Then at some point you have to kind of plan for the inevitable retirement. And I kind of liked taxes. I liked accounting. I wanted to become a financial planner. I figured, hey, I'll get my CPA and I'll set myself apart and be different than a typical financial planner. And I really fell in love with taxes and, accounting. So just kind of ditched the whole financial planning area and stayed in accounting and really enjoy it.
Okay, perfect. And it's funny because actually my dad, he's an accountant as well. He had a tax business when I was growing up. He doesn't have it anymore. He's retired now, but he got into it. And it was one of those things, Craig, that I just had to stay away from. I wasn't really that good with numbers accounting myself. So I commend people like
you. Yes. And we have really broader based focus. We're looking to be proactive with our clients and helping them keep more of their, what they're making, where, the typical accountant out there is really good at putting the right numbers in the right boxes. But it ends there. We're kind of being proactive and saying, what can we do a little bit differently so you can keep more of that money?
Got you. Okay. So let's talk about, first off, with setting up a business for real estate investors. Let's say someone is getting into like even doing some rehabbing and might even be getting into getting some money dispersed from different lenders. As far as setting up their business, do you think it's better to have like maybe like a LLC or a corporation for tax purposes?
For tax purposes, it's definitely give you some more options. It can be very beneficial depending on how you set it up. Just because you may own the real estate inside of an LLC doesn't mean that you can't be operating your business, out of another LLC or out of an S corporation or corporation. Have a little separation there. And while I'm not an attorney, I would say, most people should hold their real estate inside a separate entity. So God forbid something happens, they're protected.
Right. Okay. So let's talk about what is proactive tax planning and like how can someone go out there and, minimize paying so much taxes?
So proactive tax planning is looking for ways to do what you're already doing to make them, tax deductible. So guys like Trump, Buffett, all the wealthy people out there, they have teams of attorneys and tax people to help them pay, the lowest possible tax. All right. So why can't you as an individual business owner or investor have your own little team that's going to work for you to say, okay, let's save some money here. What can we do a little bit differently that'll make it legitimately tax deductible and I can save money?
Gotcha. Okay. And what is some of like I know you work with a lot of different people. So what is some of those like biggest mistakes that you see a lot of small business owners make regarding the taxes?
So the biggest mistake is, failing to plan. Nobody communicating with their CPA throughout the year. They're waiting until February, March, April to talk to their CPA or maybe later. At that point, it's too late. You need to communicate with them throughout the year. Another mistake is audit paranoia. Oh, if I do that, somebody told me I'll be audited, all right? If the tax code says you can do it and you properly document it, do it. Don't be worried about getting audited, all right? A very small percentage of people do actually get audited. Most people will get a notice, you send it in with whatever the IRS is requesting, and you're okay. So just because somebody told you, a home office is a red flag, people, it's like these rumors, they just spread.
Right.
So as long as the code says you can do it and you document it correctly, do it.
Gotcha. Okay. And so what are some of those, like, I know, for instance, some people don't even know this though, but I've heard that there's been different ways for, like, for instance, you can pay your child a certain amount of money.
Correct.
Yeah.
So, and that's a big change with the new tax law changes. So, you could pay your child, a reasonable wage for work that they're doing, and you better really document that they're actually working, and they get paid, and the money goes into their bank account. Tax courts ruled you could pay a kid as young as 7. I typically recommend clients wait till they're about 11,
okay.
Because how can you really pay a 7-year-old? Right?
Right.
What can he really do that is going to make it significant? But with the next new tax rule changes, you could actually pay your child up to $12,000 a year, and that child is going to pay no tax federally. They may pay state tax depending on where you are, but they'll pay no tax federally. And if you do it the right way, you may not even have to pay FICA or Medicare on that money. Wow. So hiring your kid is something, hiring your family to do different things, having a medical expense reimbursement plan. So if you have the right type of entity set up, you could write off maybe the cost of the braces. The cost of the things that typically, while they are deductible, you have to reach a certain threshold to make them deductible. So many people do not get to deduct them. So medical expense reimbursement plan, if you set it up with the right entity, you can write off dollar for dollar all those out-of-pocket medical expenses.
Okay. And I've heard, I'm pretty sure you can answer to this. I've heard supposedly they're going to be getting rid of, like, I guess, the entertainment
Well, entertainment, yeah, that ended with the new tax bill. So entertainment is gone. It doesn't mean meals are gone. But there are other things, too, that you can do. How about having a home office? All right. And maybe that's not going to be a huge deduction, but now your travel from one office to another is deductible. And you have to meet certain requirements on that home office. You have to spend about 15 hours a week in there, which most business owners are actually working from home, probably easily 15 hours a week. You have to have a separate space. But that opens up travel from your home. It also opens up what we call the home athletic facility, which could be your home gym or your pool, which makes that deductible.
Okay.
Then we have obviously your car and vehicle expenses, meals, retirement plans. Are you set up the right way? Especially if you're a flipper, are you in the business of flipping or are you an investor? Different taxing criteria, and you want to make sure that you are in the business of, you're actually reporting things that like you're in the business of and not an investor.
Gotcha. Okay. And so would you recommend, like, say if someone is they have a CPA, do you recommend them getting like a separate bookkeeper as well, or?
Well, they need to make sure that somebody's keeping the books, and if they don't have the time to do it, or their time is better spent doing something else, like searching out new deals, then yeah, they should have somebody else doing that.
Gotcha. Okay. And what are like the 10 most expensive tax mistakes that cost business owners thousands of dollars?
So we've covered a couple of them. One that we haven't spoken about was the new one, which is the qualified business income deduction, Section 199, which is part of the new tax code. And there's a couple of hoops you need to jump through to get this deduction, but it is a deduction that can be equal to 20% of your net profit. So if you have a business and you have about $100,000 in net profit, the government's going to give you an extra $20,000 deduction.
Wow.
On top of everything else.
Okay.
So, and that's why you need to communicate now with your CPA, so you make sure, am I meeting the criteria for that?
Gotcha. Okay. That makes sense. And are there any other like different mistakes that you see people make? Just, so like I said, some people don't even communicate until it's
right. Exactly. Well, that's a huge mistake, waiting to communicate, because the doctor doesn't call you up and says, yeah, how are you feeling today, right?
Right.
You need to communicate with him. You need to start the process with your CPA, and he should continue the process with you. We speak with our clients on a monthly basis. We go over their P&Ls, and that allows us to really know what's going on and give them the best advice. So communication is key, whether it's monthly, whether it's daily, whether it's quarterly. At the very least, it should be quarterly. But if you're buying and selling or you're investing in properties, you need to talk to your accountant, your CPA, and what else can I be doing? Are you holding your properties? Can you be doing cost segregation plans on these things and accelerating the depreciation? What can you be doing? And the only way you'll find out is if you have that conversation.
Definitely, I agree 100%. So one thing that I've noticed that some people have complained about too is that some CPAs don't really know all the advantages. So like, let's say someone is going out to kind of interview on maybe possibly hiring the CPA, like what some of the questions that you would recommend someone to ask just to kind of figure out if they would be a good fit for them?
Well, here's the key. One key question I'd say is I'd ask them, when was the last time you told one of your clients a way to save them taxes?
Okay.
That's a key question, because that's going to tell you whether they're proactive or they're not.
Gotcha. Okay.
All right. Other than that, they really, obviously credentials are a good thing. You also want to make sure, are you going to communicate with me? Are you going to get back to me? Am I going to wait a week or 2 weeks to hear back from you? Are you going to get back to me within 24 hours? How do we communicate? How do you like to communicate? Some people like to communicate via email. Some people hate email. Some people like telephone. Some people like text. So you want to make sure you guys can be on the same page.
Definitely. I agree. Yeah, I just had a friend, he was complaining about that he was having a hard time getting in contact with this CPA, and he was looking for another one. I might have to send him to you. That's
right. So yeah, communication is key. everybody has time. Everybody has, there's a value to that time, and you need to make it work.
Definitely. Okay. And I know you have a free book that you want to also give to the listeners. So let's talk about that book and what kind of different things some people can discover it and learn from it.
So the book is the 10 most expensive tax mistakes that cost business owners thousands. And we'll provide you a link, which is craigcodyandcompany.com/newbie. And they could click on the link. There'll be an opt-in, and we will mail them out a copy of the book.
Okay, perfect. And guys, I'm going to make sure that I have that link to this in the show notes again, so that way you can go ahead and get access to it. But again, that website is craigcodyandcompany.com/newbie. Again, I'm going to have that in the show link, so that way you can go ahead and get access to this. Because, guys, we need to get with a CPA right now, get the information out, start communicating with your CPA and getting ready to be, proactive, like you said, and making sure that you are getting stuff handled and taking care of all of the benefits that you can be using to reduce paying taxes. It's a shame, Craig. I'm pretty sure you saw that many people have lost their businesses, have got, taken to the cleaners, man, because they haven't got their paperwork together with taxes.
Correct. Most people that don't track, on a regular basis, their expenses are actually vastly understating their expenses when they finally get to do them.
Wow. Okay. Real quick, before we get off, I want to ask you, just randomly, what is kind of the worst horror story you've saw in the business from someone not necessarily planning out right with Uncle Sam?
Oh, a lot of money wasted. Wow. A lot of money. Okay, let's say 6 digits.
Whew.
Yeah.
Yeah, I mean,
that's a lot of money.
Yeah, I couldn't imagine waking up with a 6-figure bill, and I'm pretty sure a lot of times that's they probably garnish the wages and everything out of your bank account. I've heard.
Well, if you're paying taxes but you're just overpaying, to me that's a horror story.
That's true.
So in this case, there was no garnishment. They just gave the government an extra $100,000.
Yeah. You work so hard. It's like, man, that's the reason why guys and girls listening to this episode, get with the CPA, okay? Because you don't want to work this hard for your business and have to give away extra money that you shouldn't be giving away.
Correct. Exactly. Keep more of what you make. That's what it's all about.
That's exactly what it's all about. So guys, again, you got to if you want to get access to his book, it's going to show you really the 10 most expensive tax mistakes that business owners make to make sure that you don't make them. That website again, so that way you can go ahead and get access to it now. craigcodyandcompany.com/newbie. Any other last words, Craig?
Just be proactive. Make sure you communicate with your CPA, and you'll save some money.
Perfect. All right, guys, you heard best. All right, thank you for tuning in to this week's episode. Make sure you also leave us an honest review. If you love this episode, please share it on all social media. And you know my quote. Don't live the dream, live your dream. I'll see you in the next episode.
Thanks for listening to Escaping the REI Newbie Zone podcast at www.escapethenewbiezone.com.